Hey folks, and welcome to the Pipnotic Symposium for the 15th of April 2024. We're going to start looking at the American dollar COP data from last week. A net long, we are still negative. What does that mean? Well, that means that when you look at something like an overview where you can see all of the market participants, the commercial, non-commercial, non-reportable and total reportable, you can see that they're pretty much mirror images of each other. Typically you'll have the commercial which mirror the non-commercial, and you have the non-reportable that mirror the reportable, more or less. You can't guarantee, you're not guaranteed this, but this is often what you'll see. And so when you see something like that, it's very difficult to see who's in charge, because you will get this, you will get 50% long, 50% short. So if we go here, we've got 49, the week before 48, 49, 51, and so they're pretty balanced. And yet we're seeing this across the board here, almost 49, 49, 47, total reportable, 49, 48, 49, 49, and then here we're seeing a slight discrepancy in this information. So here we're actually saying that the non-reportables, they are more long than they are short. Okay, so we have 64 long relative to the previous week we had 65. Okay, and so what we're saying here is that we have the biggest imbalance is in the non-reportables. But when we take all of the information, when I say all of the information, I mean all of these guys here, and this one here, this one here, this one here, this one here, and we add them all together and we subtract the shorts from the longs, this gives us the net. Okay, and this is important for us because this shows us what it's likely doing. So if we go here to the overview, you can see that we're still net short, okay, for the American dollar. But notice week on week that we are seeing a less aggressive number of short contracts for the American dollar. Okay, so we're seeing what appears to be the American dollar getting rid of some of those short contracts and begin to move a little bit bullish. And we've seen this on the price chart actually. So we jump to the price chart here, you can see pretty clearly that here we had the negative from the previous week, and then we had the bullish, the big run from last week's data. Okay, and so I mean, we don't know what's going to happen, but we're certainly poking in to this area of supply here, which is a biggie. We had this tested several times before. We finally went through it from this area just here. We established the sell zone, and then prices cut away. So this right here is the price, or the area that we would expect prices to go to. So I feel pretty comfortable selling here for shorter term, also because we have a price inefficiency. Okay, just here we have micro supply in here. You can't see what it is. Been tested once, twice, and something in here caused prices to accumulate and wriggle further north, and we're seeing that pretty clearly here on the price chart. And so what we want to see here is we could expect prices to move back down a little bit, but according to the futures data, that we're likely going to see prices continue high, because we're seeing the net shorts contract a little bit, get a little bit smaller, and this could be a result of the non-reportables accumulating more long orders relative to the short orders. So this could be what is driving prices higher. Okay, so for the American dollar, I would expect prices to pull back a little bit. We had this area marked off last week that we spoke about. Prices tested it. Here we had this area here, which we spoke about. Prices tested it once, twice, and then we just cut through this. So this one is now gone. It was tested, and the area that caused that is, well, it's this one just here. Okay, this is where prices came from. This is the origin of that move. Okay, and this is probably related to the CPI data that we saw last week. But if we look at this and we do a little bit of an analysis, if we can find some areas that might be interesting to us. There's nothing here on this time frame. So what we need to see is we have to find those areas that cause that price to rally, and I think that we're going to have to come lower. We have price inefficiency just here. We had prices that moved up and accumulated just here. before they rallied up into that 4-hour supply, that we can see going back quite far. So here, I would expect prices to pull back a little bit to a logical area of demand. And because we have this, I would be a little bit careful about buying here, because this should rebalance. And we've got this here, and I don't like this so much because this is just messy. This is liquidity being consumed, reducing it. And the only area that I think would be interesting is where I have this line just here, which is a little bit difficult to see, but let's put a box on so we can see what's going on there. You get a price tag on it. Here, so the 104.83 area roughly. Okay, so we want to be below this because this is messy. We have inefficiency down here as well, so I'd be careful buying higher. I would expect prices to come down maybe to this area here, because you have supply tested, price finally breaks it, and often these provide support once they become consumed. Okay, so price revisits this kind of price window here between the, let me get rid of this, between the 104.60 and the 104.40. This could be an interesting spot that we might see prices move away from, just because of the nature of this pattern here. Price went up, we failed, we cut through it, and often they like to retrace to roughly that price window there. So this is what I would expect, so keep your eye on that, but keep in mind that because we're reacting here, that we could see a bit of a shorter term pullback on the dollar index and thus pairs here. So if we look here, this is the Canadian dollar. Sorry, is it? No, it's the Kiwi dollar. So looking at the Kiwi dollar, we were talking about strength on the Kiwi dollar through last week. The prices rallied up. We came to the backside of a trend line. We can also see that we had some respect for this level historically. And then prices finally broke down. We came to the backside of that, and this is where we left from. And now we're wriggling lower on the back of the American dollar strength. And what I like is, I think this is interesting here, and I like this because this is where we had a lot of testing here. Okay, and we managed to move through that from here. This is where we saw that release come from. This is the buy zone right here. So I would be happy buying once prices come back down here. Okay, so if we get a little bit more dollar strength to push up into that 4-hour zone we saw in the index chart, that would drive this a little bit lower down into this area here, and then we would be standing on a very inefficient move on the American dollar and on the Kiwi dollar here that would support a bit of a push higher. But also we have to pay attention to the data this week, because this obviously is what is deciding the major flow. So if we have a look on the Kiwi American dollar, if we just jump in here and look at the NZ and we crack that out, and you can see that we're having a decrease in long positions. Okay, so this is, we had the increase in the long positions, now we're seeing a decrease in the long positions. And so here's the increase and here's the decrease. Okay, and this data that you're seeing on the COT chart it's not leading because we're getting it late, but at the same time they normally line up quite nicely with some of these zones that we're seeing on the price chart. Okay, and so pay attention to those because they're super important. But we're seeing a decrease, which means we're probably going to wriggle a little bit further lower this week, and I'm thinking we'll go to maybe around this area here. Okay, for the Australian dollar versus the American dollar, I think we have a similar scenario. Let's have a look at the COT data. Decrease in the longs for the Kiwi on the Australian. Here, let's see if we're looking pretty similar. Yeah, we're seeing a similar thing, like a decrease in the longs, but we're net long. We're just seeing less of that. So moving here, we are, yeah, we can expect maybe prices rebalance. This, have the buyer zone established just here. Okay, so we tested that one time, pointing to an area of liquidity in here, 2 times, 3 times, and now we're kind of sitting on that area here. But we have this, and we have this, which I like. And here we had an area, it was tested several times, and it was removed by something in here. Prices came back, we accumulated, and then this is where we left from, and we went much higher. Okay, so I think should prices come back to here around the the 0.6380 to the 0.6340, I think we should probably see some reactions at around that area there. Keep your eyes on that. The American dollar, sorry, the euro versus the American dollar. We can move this now to here. This is a robot. I'm not doing this. The robot's doing all this trade stuff. We have a similar situation here where we had testing, removed. The area that held prices is here. This is on the back side of this zone. Tested, removed. Okay, so I would expect prices, of course, to move back up into this area here, and then continue to move a little bit lower on the back of the positive COP data that we saw. And so I think that we'd probably have that, maybe that pullback on the American dollar, which would maybe result in some flows moving into the euro, and then the continuation of the American dollar strength that would drive the Aussie dollar, American dollar lower too. I mean, where would prices go? Well, we have a few things here. We have something around here, so I think this would be an obvious place. This is just the algo, the buy and sell zones that did this, put on this trade, but I don't think it's too far off. I think if we fed up into here, we could probably get like a nice move lower. If we have a look at the weekly, just to kind of gauge what we're seeing here. Yeah, on the weekly, we're seeing this, tested, this, tested, broken by this. And so I think we'll see prices come down and revisit these lows right around here. So the robot got that nicely, but we'll wait and see. Let's have a look at the COP data, the euro. So we are negative and continuing to accumulate short positions. We're actually very negative if we look who the primary players are here. We have this here. This is the non-commercial. They are just ticking bullish, and the commercial who are ticking bearish. And we have the non-reportable and the reportable. They're pretty much moving in alignment. This running at -20, and this one is at +20, so they're pretty perfectly balanced. Here we have +30 and -50. Okay, so this is why we are seeing negative bias, because we have the commercials slightly more bearish than we have the commercials bullish. Okay, this is why we have the net short. But if we look at all of the data, just going back a little bit further, just to kind of understand what's going on, you can see that over time we've actually been we formed this big low, and you can see the trough slowly moving up. Does this mean that we're going up? I don't know. I think both the European and the American economy are sinking ships, but I think for the time being that I think the better bet is long the American dollar and short the euro for the time being, also in relation to interest rate differentials. So I think this is an important thing to keep in mind. So shorter term, maybe follow this down into something down here. You can probably get some pretty interesting shorter term trades lower. We might not even pass this low here. I think maybe from around this point here, we should start to see price show a bit of weakness and move lower, but we'll see. Moving to the pound. The pound, I mean, look at these. Look at this. Then go to this chart. And the Aussie, and the Kiwi, They look quite similar, don't they? It's funny how everything is moving in sync, and what they have, the common denominator for those pairs is the American dollar. So it seems to be the American dollar that is deciding the direction of these pairs. Here we can see bounce, 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 bounce. So I'm thinking that prices will probably move up into here and then move lower. We're going to react here likely, and then essentially I think we're going to react down here somewhere as we rebalance this. This is rebalanced. We kind of pretty much came to the origin. But yeah, this will be interesting to see. But I think as well the same scenarios as the other ones down here. I think that we're probably going to see prices continue to wriggle south for the British pound as well. That was ugly. Let's go like that. There we are. Okay, let's have a look at the COT data for the pound and also see how it's developing over time. British. Boom. Let's see what's going on here. Okay. Yeah, it's looking pretty flattish. Let's just focus on bleeding edge data. And you can see that we were pretty long 2 weeks ago, and now we are looking to decrease long positions. Okay, so we're still positive, but we're decreasing the long position, so that could lead us to believe that the prices would continue to move lower a little while. But we'll have to wait and see. But my bias would be to sell somewhere up here. Here we had this zone that we spoke about last week. It was tested. Okay, we had this zone. This was essentially taken from here. Okay, prices tested it. Let me put this in a different color. It's a little bit messy and difficult to see. We had this tested, removed. What area removed it? Well, it's tough to say because prices just wriggled efficiently back up into here, back up into kind of this zone here, which is just above this area of supply. And then we had US dollar news economic data release, which caused prices to shoot lower. So we removed this. Okay, and then we sat kind of on that area for a little while, kind of gnawing away here, and then we broke lower. So I think that we'll probably see some reactions from around this area as prices continue to move lower. So let me get rid of this, and on a daily chart, it just looks a lot clearer. Yeah, on the daily chart it looks clear. Right there. Okay, so I would expect prices to jump on there and move lower. Let me have a quick adjustment on the algo. Okay, good. So I think this would just be a really interesting place to begin to sell. So I'm just going to mark that off. The algo found it beautifully. And then from around there, and we would probably see a bit of a struggle moving beyond here, these lows here. What we could do is we could take it down to a smaller time frame and then see if there's a little price nodule that's yeah, I mean from here. But again, we have inefficiency here, so I wouldn't put an entry here, although we could easily come up to there and turn. I'd be more comfortable just waiting for that zone. And looking here, I mean, this is a terrible zone. Prices tested, and then prices came down, we accumulated, then we left. But I think what we could do is we could just box off that whole area here and then move away from that. On the daily chart it's pretty clear. If you go to 15, you can see it's just a very clear break from here. We also have an interesting one here. This is the one where prices came to before they left, and so again this is messy, a little bit clearer, although we've been pretty deep into that area. So maybe from around here, as prices maybe wriggle back up into there and move lower. I don't know. We'll have to see. I still haven't found my crystal ball. Okay, let's have a look at the American dollar versus the Japanese yen. Yeah, man, I'm still long here. You can see here, still long. Interest rate differentials are simply, I can't sell the American dollar, Japanese yen, so I just wait for a pullback to this area. This is a weekly zone. The robot found this, and I think we'll eventually pull back and then continue moving higher away from here. Because if you go into the bigger time frames, you can see that we've been sitting on this area. We tested it, failed, tested, failed, and we rallied, accumulated, and then we came up. And so, I mean, it's pretty clear we're going higher from here, I think. And so I think that this is just going to be a pretty clear spot at which to begin to accumulate longer positions. So it's going to wait patiently for that to play out, and also holding that position is going to get you some swaps as well, which is always quite nice. But if we have a look at the dollar yen here, going to the yen, Japanese yen, look at the most recent data. We're actually seeing an expansion on the short, to the short side. We're still net short. We were positive, we went lower, and we went lower again. Okay, so this is telling us that in the futures market, at least, there's an expectation that Japanese yen is going to move lower, but we're not that net short. Okay, and if we look over time, we've been way more net long and net short in the past. Okay, and so we could, I mean, here we were, before prices turned here, we were like plus 25,000 net long here. Okay, so I think that we could certainly continue to buy before prices begin to turn. But we'll have to wait and see. I'm quite confident buying at that weekly demand. Okay, let's continue on. We're going to the American dollar versus the Swiss franc. Yeah, so here we had this nice little zone, sell zone, and we left. Okay, prices came up to there and we accumulated at that area for a little while, and then we popped through it, and now we're kind of messing around. But this one is technically gone. The one that is not is down here, and so I think we could move down here. Here we had a pretty interesting zone, sold, removed from here. Okay, inefficiency, buy zone. So price is kind of having a difficult time. Oops, doing anything just here. Inefficiency, you will see maybe a pop, but I'm looking to buy lower, down around here somewhere. So we'll have to see what happens. Yeah, could be adjusted a little bit here, looking at the 4-hour chart. You know, I prefer that. Okay, because this is where the slingshot was pulled back to before we left. So the liquidity supporting this move higher is actually from around here. And so I think we could put it here or so on that little tiny 4-hour zone, and then be done with it. So we'll leave it at that, put it back on the 1 hour, zoom in, and then we'll leave it and see what happens. Good. Okay, going to the American dollar versus the Canadian dollar. I mean, here we had a lot of testing here. Many tests. Now it's gone. So there's something in here that's causing that. But I'd be pretty comfortable kind of buying at this general window, price window here, somewhere around here. So this would be my zone, stop, entry, and then just playing out that bias swaps. That it's too expensive to sell, but I think we'll definitely have to wait. We're also negative long, just barely. Yeah, but my bias is long for the shorter term. We go to the COT, look at Canadian dollar, and get in there. Yeah, we're still expanding north. Let's look at more data. You see, yeah, so cycle-wise, we had our So where are we going from here? Maybe lower. We're getting to some super high net long positions on the commercial side, and this is often where they pull back from. So when you reach these high levels, prices, and low levels, of course, prices often pull back, and we're getting close to that. You can see here, so I'm thinking we'll probably begin to contract again and move lower. So let's look for a short. Where would we like to sell this? Well, I can see immediately that, let me just put this on here. So we have this area here. This is where we pulled back from before. So let me do this in my green. We had a little tiny zone in here, tested. We had a child that was formed, another child that was formed, tested, 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 removed this messy area. We'll just mark it off. This is where we got a messy area. Okay, it was removed by this demand. Then here we have supply, slingshot, and then prices took everything out. But I'm thinking from around here. So I would look, because of the deep pullback here, I would certainly look at this, the first red candle before this expansion, which puts it like around here. Okay, so right around there. So I'd be super keen on selling. Well, that's a big zone. I'd be keen on selling from around here, the 138.55, especially if we continue to expand inefficiently, and then just watch price in smaller time frames as it begins to break down and rebalance this. Essentially, I think revisit excuse me, these kind of prices here, maybe here. So selling a little bit higher, so waiting for the Canadian dollar to reach a bit of a higher price before we begin to sell. But I would certainly sell at a price no cheaper than the highs of this slingshot. Okay, going to silver. Yeah, silver is, if you look on the 4-hour, we had a big pullback last week, huge kind of jump higher. Okay, just had to restart my terminal. I wasn't getting data, but here you can see clearly that we had a huge pin bar, and then we had a big retracement. So there's something is telling us that we have something up here. We had sellers, maybe profit taking. I don't know. We'll have a look at the COP data in a minute. But what we can see here, we can see that we've got this here. So we did not really do anything. We'd want to move further lower, but there's no demand here. There's no demand here, and so I would expect prices to move back up into here, maybe challenge the highs once more, and then maybe wriggle a little shorter term south. Let's have a look at the COP data. Let's have a look at the weekly before we do that. Let me get rid of all of these objects. Be gone. Yeah, I mean that means a lot. That's a huge pin bar. We have this super zone down here, right there, right at the 50% price point on the move from this low to this high. So revisiting these highs, that would be right at the kind of the median price between the premium, the premium price and the discount price here. That's 50%. That'd be a perfect, very logical place to begin to scale into long positions as prices potentially wriggle higher from here. Let's have a look at the COP data here. Excuse me. Silver, boom. Yeah, so we're expanding short. Okay, so they can take a while to play out these positions, but you can see we've been net short for a while, but prices are not moving lower. You see, prices are not moving lower, they're continuing to move higher. So if we look here, let's have a look. So if we go back to just the beginning of this year, and you can see that what have we been doing? We've actually been slowly very slowly. We do an average. We're slowly reducing the short positions. This is net across all participants here. We're slowly reducing our short positions, which could mean that we are going to see higher prices for silver. Going back to the beginning of the year, that is here, so we're reducing our short positions. This is what we've been seeing here, and then prices are continuing to wriggle higher. So this is kind of counterintuitive, but I'm thinking still that we're going to see prices continue to wriggle a little bit higher. If we look up here, you can see that there's something going on in that little price node. Let's go from here to here, and then dip down into the smaller time frames and try and pinpoint it. Let's have a look. Yeah, further down. Yeah, not seeing any more data there, unfortunately. But I think that the fact that we're continuing to increase short positioning would maybe lead us to believe that we are going to have a bit of a pullback, especially considering the fact that, at least on the daily chart, we are seeing some inefficiency in the price. On the weekly, even more so. Okay, so we do have this. We have the buy zone established. It's right here. This is the low of this candle, and we have the first, support in view. So we do have this just in here. So I think prices could certainly maybe wriggle up and then come back to this area here, and potentially down here, this being the buy zone. So this being the edge of the demand. You can see that the line is pointing to this area. So this is telling us where prices had to move through in order to qualify this area of demand, and we have the buy zone just here. So if I remove all that and I quickly delete all this, you can see it went quick, didn't it? The software is fast. Like you can notice right here, you'll see when I click right there. So right there, this is the edge of that area. So prices could easily move back down into here before we continue moving higher. But we did have a huge pullback from the highs down here. So yeah, we'll see. Looking at gold, seeing a similar kind of thing. I'm just waiting for gold to break down. Rather, I'm looking for gold to break down. Text properties, break down. There we are. Okay, so looking for that to happen, we have small going here. Nice little price point there. Price is moving higher. We do have this. We do have like the monthly demand zone just down here, and this is also where prices turned at a couple of times. So that's kind of not a very straight line. They're kind of coming from around here, so that kind of brings our attention to this area here. And so this is very far in the future, but I'm thinking that prices are going to continue to move higher, but maybe after a little pullback. And you can see that there's a lot of selling up here. This is likely profit taking. Let's have a look at the futures market and see if we can make sense of that. So jumping in here, we go to the gold, because if the gold is net long, then that's going to be profit taking at the top. No, we're net short. Okay, so we should be maybe begin to see some of these like a bit of a pullback in the price of gold. Because if you think about it, if you look at the numbers, I mean, the US is not buying any gold. We have China, we have Russia there accumulating enormous amounts of gold. So it kind of makes me worried for the US at least, that they're not really looking to acquire anything that actually has a value. Yeah, I don't know. I'm not an economist. I don't really know what I'm talking about. But we'll have to wait and see what happens here as these net positions for gold begin to expand, maybe negative, or if we have a bit of a pullback. But I think for the time being that we could see gold pull back, and so we could begin to accumulate short positions from around here, because we actually have such a big wick there, maybe have a look on like the 30-minute chart and see if there's anything. Yeah, so what we had here on the 30-minute chart, we had this, which was tested, and now it's gone. The area that removed it is this little zone right here. Okay, we had a little tiny zone here, held it for quite some time. This one removed it. And so I think that it would make sense to begin to accumulate short positions from around here and higher. And obviously from here, this is where we have kind of the box there. So zooming in, let's have a look. Now this makes sense. Okay, so we're putting ourselves kind of in the wick. Okay, so I think that we could see this rebalance, prices feed up into these areas here. We're also, it's very expensive to hold long positions in gold. Swap long minus 30. I have to make a little bit more space for the text up there, I can see. But it's super expensive to hold long positions in gold when you trade it as an instrument like this. So you have to buy the asset itself as a commodity and not as a synthetic like we're seeing here, because then you're punished for holding it long. And so short, we're in line with the swaps, and so we could also earn a little bit of swaps until it figures out what it's going to do. But I think long term, gold is moving higher. Oil, let's have a look at the oil chart, weekly chart first of all. Let me clear off this. We've visited a lot of these areas already. Let me go in here and remove these. Okay, not a lot of clarity there. We do have here little test before prices ran lower. This is where we saw this removed, tested, removed. So there's something in here. We could go like that, move it forward. This whole zone here is tested once, twice, and then we finally removed it. The area that removed it is, there's something in here. This candle here is essentially prices rallying, coming down almost to the origin of that, and then moving away. So if we go to a smaller time frame, maybe the 4 hour, you can probably see that. Where was that? I'm getting this one here. I think price is rallying and then moving down to the origin off this daily demand, and price is wriggling higher from there. The prices are kind of breaking down. Difficult to see on this time frame, but we can see that the prices are kind of just wriggling just around here, showing a lot of rejection. So I think that we could revisit some of these zones here. We've got something in here. Okay. We have this. This was the sell zone, tested. Prices went up. We failed. Formed this, tested that area, and then we managed to move away and through that zone here. So I mean, I would be happier buying at a lot lower prices. Maybe from around here, or selling at around here at around the $91 point. This is where the sell zone is established. Okay, and we have, if I get rid of this, you can see that we have a bar here. This is like a kind of like a bit of a pause, and so prices could maybe dip away from there. We came back, and so I think revisiting around here, potentially even a little bit higher up, and because I mean what I'm having a difficult time with is that these wicks, there's a wick there, there's a long wick there, and so these wicks, what they do every time they move back, they come down, they move back, but they thin out liquidity. So you want to look above the wicks, which is what I'm trying to do. And if we do that, we have this. This is where it is. This is at the 93.36. Obviously that would make sense, but I think we could probably see some reactions at a different area, at this area here. So let me move this up there. Here, the 9100 area. Yeah, well, let me remove one of these. No, whatever. But I think some reactions here, and this would be like the turning point. I think once prices get back up here at the 30, the 93. Let's have a look at oil. Oil, West Texas. Okay, let's have a look. Yeah, so we're seeing like we're net long, but we're seeing a decrease in the accumulation of long positions. So we can expect prices to move lower, shorter term. If we go back and we have a look at more data, you can see that, gosh, I mean, we're super high. We were at net 23,000 contracts, and now we're starting to contract and move lower. So if we go back to the price chart, with that in mind, go to the weekly chart, and we're starting to see the number of long positions contract at a point when prices have had like a pretty decent run. So if we get up here, I'm going to start to scale in and sell on higher prices as they begin to maybe wriggle down from here. Good, 40 minutes. I'm going to stop. If you have any questions, please let me know. Thanks once again for watching.